There's just so much more to hear.
Download our podcasts at DubaiEye1038.com.
To ascertain the health of Dubai's economy, we need to look at the oil and gas, at retail and construction and projects. And it's the latter we're looking at specifically this morning, because last Thursday morning, Meed Projects and Meed.com held a briefing session at a Dubai hotel to update participants on the state of the regional projects market. In the studio with a 1,000-watt light bulb to shed some light on what was said is Ed James, Director of Content and Analysis at Meed Projects. Good morning to you, Ed. Thanks for coming in.
Good morning.
How good is the mood in the projects industry, did you fathom on Thursday morning?
Well, it very much depends where you are and what sectors you
Tale
are
of two stories,
expert
bread
in.
Buttered on both sides.
Exactly. So if you're anywhere in the GCC other than Dubai, it's a pretty bleak picture, as project awards have fallen something like 40% or $50 billion over the last couple of years. So it's quite desperate for everyone. But if you're in Dubai, it's really business as normal, because number of new projects and the value of contracts being awarded is as high as it's ever been. It's very active right now, although there is a lot of competition, obviously.
Just to put some numbers on it, in dollar terms, what's that backlog in terms of project value? You said it was 40% down in the GCC ex-Dubai. Does that mean future projects or the current projects?
The current projects being awarded. So in 2015, just as the effect of the oil price falls being had on government budgets and government spending overall, because we are talking about a projects market that is dominated by government spending, we had $177 billion of contracts in the GCC. In 2016, this fell to just $117 billion. And we're looking like this year we're going to have exactly the same. So it hasn't been an improvement. And really, if you look at Saudi Arabia, Kuwait, for example, we've seen a halving of project spending.
So the 40% down figure is outside the Gulf. Dubai, you said, is okay, but just okay.
Yes, well, it's not rapidly increasing. It's stable, but it's, of course, not in itself enough to cover the shortfall or deficit from other markets. And also what we've seen is that as the Dubai market has stabilised or has remained fairly active, we've seen a lot of companies, contractors and companies in the project supply chain move from these other markets and focus more on Dubai, which means that although there is a lot of work around, it also means there's a lot of competition and profit margins get affected as a result.
Profit margins and also cash flow as well. That's what tends to happen in times like this. We've seen it here before. What did the people at the meeting on Thursday morning say in terms of cash flow? Are they being paid for work done?
Well, cash flow is always a major issue for contractors. Delays in payments, whether from your clients, disputes over whether you've completed the work or not, to the client satisfaction, and that means that often companies are waiting several months, and in turn that means that their labourers or staff aren't paid, and then their suppliers and subcontractors in turn also get payment delays, and this causes real ruptures in the projects market. We've seen that in Saudi Arabia, people having to be let go and companies going bust and so forth. So in Dubai, it's a little bit better because the major clients like Iman, Akhil, Miras they do have their own revenue lines and therefore do have access to cash. But nonetheless, if you talk to most contractors, cash flow and getting paid is their number one bugbear and the number one complaint.
And what are the possible solutions to this? In terms, first of all, of kickstarting or re-kickstarting the projects market, it's about funding, isn't it? Traditionally, a lot of the money came from government revenues through oil, and that was spent. That's not completely shut off, but it's clearly diminished at the moment. What could take up the slack? What sources of funding or financing could replace that?
Well, the obvious answer is PPP, i.e. more private sector borrowing to finance projects. However, outside of the power and water sector and also airports, really PPP hasn't kicked off really in the region, and everyone is always looking at it as the ultimate solution and talking about how it's going to start anytime soon. But in reality, we're still some way away from PPP really becoming very much mainstream in the region. So other than that, contractors are being asked to bring their own finance to projects and part finance projects, which is obviously something that they're not necessarily so keen on. And then you have companies tapping into export credit agency financing agreements with their home countries. So you've seen the UK export finance funding for Al Maktoum International Airport and some of the Expo projects. We've also seen the Italians finance Meydan Mall, for example, and the Koreans, the Chinese. Most countries around the world are providing export credit agency finance to their contractors to help them support and underwrite projects here in the region.
In terms of private projects, not the mega projects, as you say, airports and major power plants, but tier 2 and tier 3 projects, where do we see those going? What kind of feedback did you get about that level of project?
Well, if you're talking smaller private sector projects, then a lot of those, especially here in Dubai, in the real estate sector, are still being funded from off-plan sales. If anyone went to Cityscape a couple of weeks ago, they would have seen quite buoyant activity levels. Interest in off-plan property is still quite high, but it is still very much dependent on that demand and housing prices. And that is always that underlying risk here in Dubai, is that if prices were to drop or demand for off-plan property was to drop, then there would be a fall with this smaller private sector spending as a result. So that's a concern, as is lower retail numbers or fewer tourist visits, because they in themselves are a major driver of these huge mall developments we see being planned, as well as the big resorts and mall and hotel plans.
Is it a tale of two Dubais at the moment? I mean, the number of cranes visible downtown Dubai, nothing compared to 10 years ago. Is it sort of Dubai South and perhaps the Expo site versus the rest of Dubai?
Yeah, work is very much spread around the Emirate. One of the biggest developments is, as you said, Dubai South, and the world's largest international airport, which is going to be built there, as well as some big residential developments and the Expo. But the other major, really big project is Dubai Creek Harbour, which will feature the world's tallest tower, the world's biggest mall, and that's rapidly underway and will be for the next 15 years or so. That's the major hub of activity, but also you have Dubai Harbour offshore Palm Jumeirah, which is a major development. You have the Mas Al Arab Jumeirah project, where with the new Wild Wadi and new hotels there, and places like the MGM Bellagio development further along the coast. So the work is spread out, but really you're talking about Dubai South and the Dubai Creek Harbour as being the major hubs of activity going forward.
Let's look elsewhere around the region. Saudi Arabia, we know, is its own story. Massive reforms going on there. What about some of the smaller regional economies? I'm thinking of places like Oman, perhaps places like Kuwait as well. What's the dynamic there?
Well, you're talking in Kuwait, for example, of a market which is almost totally dominated by the government, so it's been hard hit by project spending. But you do have a massive new airport being built there, and you've got the world's largest downstream refining program also underway. So it very much depends in what sector you're involved in there. If you're in oil and gas, or if you're in the airport sector, then it's quite good at the moment. On the other hand, if you're in real estate, small infrastructure schemes, then it's actually quite bleak. A similar story in Oman. The new airport is due to open soon, but you've got the major focus of activity. How long have we been saying that? Sorry?
How long have we been saying that?
Yes, exactly. Well, it happens to be the case of most airports in the region. Tend to get delayed. But the main hub in Oman, for example, is in the Duqm area, where you've got this massive new refinery, petrochemical complex, industrial zone being developed. And that's going to be the hub of activity there. Elsewhere in the Sultanate, it's much more small scale and also much more delayed due to much weaker government finances.
Well, thank you very much for coming in, Ed, to fill us in. 40% down, GCC ex Dubai, and Dubai doing just about okay. Ed James, Director of Content and Analysis at Meed Projects. Thank you very much.
My pleasure. Thank you.
There's just so much more to hear.
Download our podcasts at DubaiEye1038.com.